You've seen technology undermine high street travel agents and video stores. Maybe you felt a bit sorry for the people whose livelihoods were displaced. But imagine if technology destroyed the banks. Would you shed tears or think of it as payback for the crisis? Well, this is not an entirely hypothetical question. Technology is undermining the bank's business models right now. Financial technology, or Fintech as they call it. Don't take it from me. Take it from someone who's worked in banking. Antony Jenkins was chief executive of Barclays until last year. Now he thinks banks will potentially disappear. We asked him to make a film about it.
In 2008, banks in the UK and across the world suffered one of the worst crises in their history. Trust among consumers was lost. The banks were too aggressive, too self-serving, too focused on the short term. 8 years on, while balance sheets look a little healthier, what banks fear now is far scarier than a credit crisis. Extinction. Like the dinosaurs, destruction will be rapid from an overwhelming force, not a meteorite, but technology. Now, British banks have always used technology to improve products and services for customers. From the world's first ATM here in Enfield, to the 14 million mobile banking apps that were downloaded last year. But now banks face a challenge from a totally new set of rivals, ones that have technology at their core. Many established industries have already been disrupted. Consider how Uber has transformed taxis, threatening to put traditional cab operators out of business. So what are the Uber moments for banks? Peer-to-peer lending is one. People and businesses lend to each other through online services that match lenders directly with borrowers. These firms are entirely online with lower overheads and cheaper services. With middlemen cut out, borrowers get lower rates, savers get better headline rates, and the sites themselves profit via a fee. Foreign exchange companies already make it up to 10 times cheaper to send money abroad compared to traditional banking. They've managed to remove all of the charges banks and brokers have kept hidden for decades, and users have access to the real mid-market exchange rate. Driven by new technologies, these companies are not only changing the way that customers interact with banks, they're also changing the way that businesses interact with the financial system. But while fintech businesses are creating real change in the way we interact with financial services, they still ride on the rails of this, the global banking system. These are still the businesses holding almost all the world's money, and they're almost solely responsible for moving it around. Whether you're taking out a peer-to-peer loan or moving your money overseas online, you're still relying on the banks. One of the most important roles of banks is to hold accurate records of how much money everyone has. Without banks, how would you know when I said I was sending you £10 that I was good for it? One solution is distributed ledger technology, a tamper-proof public record of every transaction happening in the world without needing any kind of bank to control it. If person A pays person B, the system knows whether person A has the money and creates a public record of the transaction without revealing the actual balances or details to anyone. The same thing could be done for savings and loans, bonds and shares, almost every aspect of today's financial system. This technology is cheaper, quicker, and even safer and more transparent than current banks. I believe that in 20 years' time, we may not need banks at all. We'll see a wave of technology-driven financial services that will change the way we all use and move money. It's not that the banks can't adapt, it's that the system is fundamentally broken. And while these technologies might be bad news for traditional banks, it could be good news for everyone else. Because this technology revolution will allow a return to a banking system based on values that serve customers better, reduce risk to society, and improve returns to shareholders. And isn't that the banking system we all deserve?
Antony Jenkins, former chief executive of Barclays there, and if you were wondering what he's doing now, he is involved in a fintech startup. I'm joined now by Hazel Moore, the co-founder of the investment bank First Capital, which invests in some of these fintech companies. Do you agree that it's going to be a really big, radical change over the next 20 years?
I really do. I think that in 20 years' time, banks may well not exist in the kind of form that we see them today. If you think about it, very many industries have been totally disrupted by the internet and by changing consumer behaviour. As the film said, Uber is the largest taxi company in the world. It has no taxis. Amazon is the largest retailer in the world. It has no shops. I think there's a very real possibility that the banking system will be
Antony
totally
Jenkins
different.
did say at the moment all these apps and platforms, they all basically come back to banks, don't they? They all sort of use the banking system as the foundation of everything they're doing.
They do, and I think it's unlikely that we will see a wholesale replacement of the banking infrastructure, but there are regulations coming down the line, for example, that are going to force banks to open up this infrastructure to third parties. There's a directive called the Payment Services 2 directive that comes in 2018, which will force banks to open up their payment infrastructures, and therefore third parties will be able to offer services on top of that.
It'll be like OpenReach and broadband providers or something.
Absolutely,
Yeah.
you know, and then the risk for banks is that they just become a utility infrastructure and their services are commoditised and all the value goes to the providers who may be new entrants putting services on top.
Now, a lot of people say it's great. Why pay the bank such a big margin if I can lend money to you directly because we've got some whizzy app that's going to match us up like apps match, you know, in the dating world. And a lot of this exists now. None of it has been stress tested. Now, banks most of the time are fine. It's only every 100 years that they have a horrible crisis and fall apart. And none of these other technologies have been stress tested. Are you confident that peer-to-peer lending, say, these platforms, that when everybody wants to get out, there isn't going to be a run on them and people are just going to find they can't get their money out because there isn't a kind of a big stock of capital, rainy day money sitting there as you have at a bank?
I think that's a valid concern, and I think one of the things that's really important to realise, for example, about peer-to-peer lending, it is not a substitute for a high-interest savings account. It's not something that you should invest in if you need your money in a hurry. It's a relatively sophisticated product, and it carries higher risk. So it should only be part of, for example, a portfolio. However, if you think about it, in 2008, when the banking crisis started, it was almost impossible for small businesses to get loans. And what peer-to-peer lending, for example, allows is an alternative source of credit, which actually, in some respects, should there be an economic crisis, might actually provide more stability into the system because there's a different source of credit available for companies.
Am I right in thinking that Britain is a bit of a leader in this whole fintech area because we're not bad at tech and we're good at finance? Is that right?
Britain, and in particular London, has a fantastic opportunity in fintech to really take a global lead in what is a huge industry. In tech, clearly the Silicon Valley is the centre of major innovation, but Silicon Valley is not a financial centre. What we have in London and in the UK is an abundance of customers, an abundance of talent, an abundance of technology, and you put all of those three together and there's a real opportunity to develop some very, very important, very significant new businesses in London.
Hazel Moore, thanks very much for coming in.
Thanks.
You.